prime example of who this coverage is intended for is, like, I grow produce for a produce stand. Or I grow some commodities and I sell them at a farmer's market. We write a lot of this product in the northwestern U.S., where growers are growing cherries and mint and asparagus, and they have all kinds of different commodities on their farm. There are, some applications to it here in Iowa, so if you're row cropping with corn and beans, it does pick up some gaps that your multi-peril coverage may have. It is based on your local markets, not the board. So if you do have a widening basis at harvest, it could provide a claim if it's substantial enough. But it's kind of a thing where, still kind of recommend buy up on your revenue protection. If you want to buy this, it's really pretty cheap. It's heavily subsidized. You could buy it for a couple bucks an acre, but you would never really expect to collect on it unless you really kind of had major issues. So there are advantages to it, but it's definitely not a one-size-fits-all for your typical operation. If you do have specialty crops or livestock, and the livestock or the specialty crop is a substantial portion of your operations income, then whole farm might be a good option to look at. So again, you may read about it, you may hear about it, maybe you already have. Anytime you read anything about a crop insurance product in a farm magazine, they never quite tell the whole story, and it always looks much better than it is. And whole farm is really no exception there. So it is a more improved product. I think RMA is pushing it, so it's taken several forms over the years. It's available in all 50 states. So I do see RMA pushing it, and I can tell that they're promoting it because of the level of subsidy. It's very heavily subsidized, so that tells me that they want growers to try it. It may make sense to your ag lenders. They can see an insured value that more closely reflects your actual operations income versus APHs and Board of Trade numbers. It does cover market price declines and production shortfalls. It doesn't have any upward price component to it, so it's only going to provide for a loss of revenue. You're not going to recalculate your guarantee based on a higher harvest price for any of your products like you would from a revenue standpoint. You do have some extra preventive planting coverage. Your policy we talked about covers 55% of your guarantee if you do have prevent plant. Whole farm would just consider that as lost revenue. So there are some little things like that where it really does pick up some gaps in your multi-peril, but again, may not be enough to justify purchasing it. We talked about a whole lot of stuff kind of quickly here. Any questions? Well, I appreciate your, yes sir.
I got a couple real quick.
Okay, yeah.
If you have hay ground and you're taking a crop off of it,
Yes.
and then putting it in the corner beans,
Yes.
or even if you don't, but it's going, what's the stipulation there as far as
Okay.
coverage?
So if you take a hay crop off a piece of ground and then till it up to plant it, it cannot be insured through the policy. But if you break up hay ground and you've not taken a crop off of it, then you can potentially insure that. There's just a few extra steps that you have to go through.
And then the other one is that you were talking about if you gaining ground, you need
Yeah.
to report. What about if you're going to lose some ground? Does it need to be reported ahead of time, or just
Nope.
when you report the acres in June?
Just when you report the acres, you can take care of that then. Any other questions? I'll be sticking around for a while. If you have any, feel free to let me know. Appreciate your business. Appreciate your time. Thanks for coming today.